The ASX continues to fly high despite the struggling economy. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard as the Ainslie Group celebrates 50 years. Today, we welcome back Branko, who's been looking at the latest Australian growth data, which has not been great, yet the share market continues marching higher. How are you going, Branko?
Good, Chris. Can you talk about today's topic? I think the disconnect that we see in the markets and kind of how people are dealing with the cost of living is quite interesting and how it has a lot of different ramifications.
Absolutely. And I mean, you address this in the article talking about the ASX really is, I mean, we're up back again at those highs or near those highs. It had that bit of a pullback and then sort of bounced right back. What factors do you think are really driving that disconnect that you were talking about? Because if you look at the economy, people wouldn't be thinking that that's going to result in higher prices at the ASX.
Yeah, I think it's very interesting. And if you look kind of the timeline of all this, we had probably like a month ago, which we discussed that the US is going into recession, the massive ASX, everything was falling. And now we're just slowly climbing back up. And it makes it even more interesting the fact that a lot of these companies actually had poor earnings during earnings season last
Mm.
month. Yet uh, everything was still kind of flying. So, I'll put up a chart in a second of some of the earning downgrades, but that makes it even more interesting that it's flying because of even, with these downgraded earnings. And, again, a big reason is often the share market and indexes, they are very kind of separated from the average person. And even though with the cost of living and the average person is doing well, what determines how the share market is going, or the flow of assets and liquidity is very different than what determines the average person's health in economic terms. Another reason kind of to go beyond that is I think that the prospect of interest rate cuts is now being priced in as
Mm.
well, which contributes to this. So even though it looks like the economy is going to probably improve with rate cuts, that's already being reflected in the share market, and that isn't necessarily being reflected in people's pockets because their rates are still high.
And I will come back to that shortly because I'd like to dig a bit more into the rate cut angle of it. But before we do that, I just wanted to talk about, you mentioned in the article mining and resources, and obviously they're the backbone or have traditionally been the backbone of the strength in the Australian share market generally, but reduced demand from China. And is that going to be quite significant? Because you were talking to me just before we recorded this also, when we were talking about China, they were talking about capping number of uni students. There's a few factors at play there with China. And as we know, they can play a very significant role in the performance. Is that at risk here?
Yeah, I think that was in the news recently that they're going to cap international students and cut them by a significant margin. And that actually would have quite a large impact on the economy and, would obviously decrease economic activity because a lot of the university students are obviously international students. And with lower demand as well from China, generally in mining resources, that, should be negative. But it is interesting. A lot of that stuff, again, is kind of priced in, yet we are continuing to still see higher and higher returns. So it's almost like you could argue that even though these things in theory should negatively affect the market, it's it's kind of moving without a care, really. It's quite fascinating. And I think that it is very difficult to understand why this is the case because of all these negative factors. But I think, yeah, a lot of it comes back to these rate cuts being priced in and not being priced in into regular individuals, lifestyles.
Sure. And speaking of the rate cuts, because it is very interesting when you talk about that being priced in. We've had, the governor of the RBA effectively telling us. I mean, I was talking to Alex about this a little while ago that she was talking about not raising or not, sorry, cutting rates until potentially next year. But it's not necessarily about when the rate cut comes. It's about the certainty that a rate cut is on the horizon. And we certainly feel that way from what's happening in the US. I actually think the RBA may not be able to hold out until next year because if you've got cutting coming very quickly in the US, we almost are forced to follow suit. So that will be interesting. But when that comes, because we know it is sort of coming, do you think that is going to have some impact on some sectors? I know you were talking a little bit about banking and real estate. What's your sort of expectation around the impacts on specific sectors when that comes?
Yeah, so I do think obviously real estate is a big one that would be positively impacted because people are more likely to obviously borrow. So that's quite an obvious one. The banking one is interesting because, and we'll get into shortly, Combank actually had their best quarter ever
Mm.
recently in this kind of high rate environment. Because they can obviously increase, so if the RBA increases it by 0.25, they increase rates by zero point 0.3 and they make a killing. And that is a bit harder to do in a decreasing interest rate environment. However, I do think that we're going to see people refinance their homes. That's going to see an increase in banking fees and revenue. And then also, obviously, people wanting to buy property and take out loans, that's going to help the banking sector in that way. So I think that you're going to have competing forces, and the banking sector is probably going to be maybe slightly better or similar, and the property market will obviously significantly improve.
And you mentioned something else in the article, which I thought was really interesting to discuss, this idea of winner takes all, where you were sort of saying you were using Commonwealth Bank as an example there to say they, generally weather that better than the smaller businesses. Do you think that that is something that we need to be on the watch for here, that you have some really quite significant potential consequences for competition in the market if we see the bigger business sort of take it and the smaller businesses under continued cost of living pressures with everything else?
Yeah, so Combank is very interesting. I'll put up a quick chart that looks at the price to earnings ratios and actually how it's like ridiculously higher than banks. And it's acting more like a tech stock in the US than it is an Australian bank. So Combank is dominating the market share. And we see this in supermarkets as well, obviously, with Coles and Woolies just dominating the market share. And this winner takes all seems to be getting worse in the current environment where cost of living is high and the share market is rising. So it's likely that if these factors continue, we're going to have continual growth in already big companies. So kind of like a growing inequality of businesses. And then small businesses will continue to get a smaller and smaller piece of the pie, which, personally, I think is quite bad, just from an employment perspective and, for a I don't know, general well-being perspective. I think particularly in Melbourne where I am, you want to see small businesses thrive, but in these current environments, that isn't necessarily the case. So this kind of winner takes all, I think, will continue as long as the economy continues uh, in the same situation it is now.
And I haven't really heard other people talking about it in that light. I think that's really quite insightful. So to wrap this up, if you really look at the high valuations that we've clearly got in global stocks, we've also got global volatility. Let's face it, we don't know what's coming next around the corner in a whole range of areas. We just had the US presidential debate yesterday. There's uncertainty there. There's uncertainty on the war front all over the place. What's your wrap up in terms of sectors or asset classes that you would consider to be the safest bet if we're looking, say, over the next 12 months from an investor's perspective?
Yeah, so there was an analyst as well that was talking about this, Mr. Hanna, and he was saying that I probably strongly agree with him. Gold, infrastructure, and property. And gold's obvious because of the turmoil and the wars, which we don't really go into. It's kind of pretty obvious. Property as well, because as we discussed earlier, if interest rates are expected to decline, property valuations will go up because more people taking loans. And then infrastructure as well, because rates are lower, people might expand their businesses, and that would require infrastructure. So that's probably a bit of a different one that makes a lot of sense. And as far as banks, I wouldn't put them in kind of those top three just because of some of the issues we discussed before. I mean, their earnings ratios are already quite high, particularly CBA. And these other things probably have more growth potential. So probably those three, gold, infrastructure, and property, are the ones to watch in the event we avoid recession. With the caveat, if we get into a recession, then obviously property infrastructure would significantly struggle because people wouldn't have the money to buy property or infrastructure.
All that makes a lot of sense. I mean, there's some good advice there, I think, to be on the lookout at least for that rotation into, like you said, gold, infrastructure, the things that are really going to perform when we move out of the current environment and into one where rates are falling and sort of you get that little bit of change of the guard in what's working and what's not. So yeah, useful information there. Thank you for your work on that today, Branko, and the deep dive. Really appreciate it as always.
Thanks.
Thanks everyone for watching. We'll chat again soon.